And it started recording. So good afternoon, children. Let's have a look into I'm sharing the screen first. So today we are going to solve two questions. That is, I'm not going to solve it. We'll see if the time permits. I may be able to do one at least. But first, let us have a detailed discussion on how these problems needs to be solved. That is the question number 9 as well as the 11th one. So first, coming to the 9th problem. Following is the trial balance of Dhanam Insurance Company Limited as on 31st of March 2016. Okay, so here this is the trial balance. So I hope you all know very well, whenever the trial balance is being provided, debit, expenses, assets, credit, liabilities and the incomes. So out of the given trial balance is asking us to prepare what the revenue account of the insurance company as on March 31st 2005 and the sheet, okay, as on that date after taking the following information into consideration. So what is the information here? They gave the information towards the outstanding premiums and also the claims which have been intimated but not admitted. There is also adjustment towards the interest accrued, and there is also claims which have been covered under the reinsurance, and there is a further bonus reduction of the premium as well as the management expenses due. So out of the given 6 adjustment, we have already done with interest accrued, we have already done with claims outstanding, we have already done with management expenses and also the premiums outstanding. So there are only 2 new adjustments under this. One is the claims covered under reinsurance and the other one is the further bonus reduction of the premium. So let us see how these have to be treated while doing the problem. So first, going with the trial balance. So from the given trial balance here, the first one is the cash in hand as well as the cash at the bank. Cash in hand and cash at the bank. So as we are going to do both the revenue account as well as the balance sheet. So revenue account, okay, the schedule numbers relating to the revenue account are 1 to 4. Okay, so under 1 we are going to take the premiums, okay, that is earned, followed by the income from investments. Then we have consideration for annuities granted. Then we have the other income. Okay. Then the schedule number 2 stands for the commission, and the schedule number 3 stands for the operating expenses. Schedule number 4 is for the benefits. So under the benefits, we are going to show the claims, annuities, surrenders, then followed by bonus in cash as well as the bonus in reduction of the premium. And from there on, schedule number 5 is for the share capital towards the sources of the funds, that is the liability side of the balance sheet. Then 6 is for the reserves and surplus. Then 7 is for the borrowings. Then further continued with the application of funds, that is the assets side of the balance sheet. So we have 8 for the investments, 9 for the loans, 10 for the fixed assets. Okay, then we have 11 for after 10, that is after the fixed assets, we are going to have the current assets. So here the current assets are divided into 2 groups. The first one is cash and the bank balances, that is as per 11. Then followed by we have advances and other assets under the 12. Then continued with the liabilities there, that is the short-term liabilities. So we have the current liabilities and followed by the provisions. Okay, so 11, 12, then followed by 13 and 14 towards the short-term liabilities. Then finally we have the miscellaneous expenditure, that is schedule number 15. But as I told you that more practically, when we are preparing the statements, we may usually not present anything as per schedule number 15. Okay, so I'm just going to here tell you how we are going to classify these given balances into the respective schedule numbers. So the first one here is the cash in hand and the cash at the bank. So the cash in hand and the cash at the bank is going to be taken under the current assets on the application of funds. Okay, then we have the investments. So investments will be taken into the investments on the application of funds, that is as per the schedule number 8. Then we have the freehold land, that is a land owned by the company itself. So this will be shown under the fixed assets, that is as per 10, that is schedule number 10. Then we have the loans and the policies. So this will be taken under the loans, okay, on the assets side, that is as per the schedule number 9. Then we have mortgages in India. So here the company usually lends the money by mortgaging the property of the the properties of the one who's taking the loan from the company. So here the mortgages in India will be taken again under the loans itself. Okay. Then followed by we have the claims less reinsurance. So as you all know, the reinsurance either will be accepted or the ceded. But when they say it is claims less reinsurance, that means already it is ceded, has been adjusted again against the given claims. So therefore the claims will be taken always under the benefits, that is schedule number 4. And annuities again continued under the claims itself under 4. Then we have consideration for the annuities granted. So here the consideration for the annuities granted will be taken into the income, that is under schedule number 1 in the revenue account itself. Then followed by the surrenders will be again a part of the benefits under the expenses of the revenue account. Then we have the premiums less reinsurance to be taken under schedule number 1 on the income side. Then followed by bonus in cash, as well as the bonus reduction of the premium will be again shown under the benefits itself under schedule number 4. Okay. Then we have the life assurance fund. So this is the accumulation of all the previous years' surpluses which is being made by the company. So therefore this amount will be taken under schedule number 6, that is under reserves and surplus. Then we have the interest, dividends and the rents. So here the interest, dividends and rents, when nothing is being mentioned in the brackets, we always consider it to be as the gross amount. So therefore this is a part of the income from investments. So this part of the income will be taken under schedule number 1, okay, in the revenue account itself. Then we have the management expenses. So here the management expenses will be taken under the operating expenses, that is schedule number 3. Okay, then followed by we have the commission. So commission is a part of expenses to the company. So this is to be shown under schedule number 2. Then next we have the share capital, that is 1000 shares of 10 rupees each, that is the face value is 10, but whereas the shareholders are paid only 4 rupees. So 1000 into 4, the paid up capital of the company is 4000. Okay, so we are going to show the amount of the capital as per schedule number 5 under the sources of funds. The next we have the sundry creditors. So here the sundry creditors will be taken according to schedule number 13, that is under current liabilities. Okay, I hope it is all clear to everyone, like how we are going to classify the given balances as an expense or as an income or as an asset or as a liability. Now let us move with the further explanation towards the adjustments which are being given. So as you can see that the amount that is are in zeros. So even for the adjustments also they have already omitted the zeros and gave the figures. So the first one here is the premiums outstanding. So whenever any income, okay, that is the premium always becomes a main source of income to the life insurance companies. So therefore, if this income is outstanding, that is further to be receivable, so we are going to add to this outstanding premiums to the given amount of the premiums in the trial balance. So here we have the premiums less reinsurance as 15,500. So in the working notes you're going to add 15,500 to this amount 180, and you're going to take the total as the premium earned unless and until if there are any further adjustments. And later the second effect of this premiums outstanding is this will be taken as a as another asset in the balance sheet, that is under the current assets. As I already told you that we have two groups. One is cash and the bank, and the second one is advances and the other assets, that is 12. So the premiums outstanding to the extent will be taken under 12, that is other assets and advances. The next here we have the claims intimated but not admitted. That means already once the policy gets expired, the company will send an intimation letter to the policyholders to claim the amount, isn't it? So, once a claim is being made by the policyholders, the company again has to go through certain processes, and in between or in the meanwhile, till the claim gets admitted, because already the time is being over, we consider that part of the claims as outstanding claims. So, therefore, if this outstanding claims is still to be payable, then we are going to add, that is 320, to the given amount of the claims in the trial balance, that is to the amount of the claims over here is 8,500. So to this 8,500 we are going to add 320, and later the claims intimated but not admitted, which is outstanding claims, to be called alternatively. So this amount will be again to be shown under the current liabilities, that is schedule number 13. Then the third adjustment here is the interest accrued. So therefore the interest accrued means what here? Outstanding interest, and therefore this part of the interest is to be added to the above income which is being provided here, that is interest, dividends, and the rents, that is 16,000 rupees. So to this 16,000 you are going to add 160, and later the amount of the interest which is being accrued, or alternatively to be called as outstanding, will be again shown under the advances and other assets, that is schedule number 12. Okay. Then we have the claims which is being covered under reinsurance. So whenever they give you the reinsurance here, and when nothing is being given as a suffix, that is whether it is being ceded or whether it is being accepted, so it is always to be assumed as the reinsurance ceded. That means this particular company has transferred its risk to another company. So therefore, to the extent of the claims which are being covered under the reinsurance, which is ceded, we are going to deduct it from the given amount of the claims. That is, here the claims amount is 8,500, as you can see. So already to this amount we are going to make an adjustment towards the outstanding claims, that is 320. So after adding this outstanding claims to the available balance, or from the available balance, we are going to give a deduction of this 140. So here this is called as what? The claims reinsurance ceded, or reinsurance claims ceded. So if you are deducting it from the claims, please try to imagine in your minds. This is very, very important, children, because I mean, even assume that you are preparing the revenue account in the horizontal form, and in case if you are doing it in the horizontal form, what happens? Debit side, that is, debit means the left hand side of the account, credit means the right hand side of the account. So debit is an expense, credit is an income. So claims is always an expense. So let us imagine that you are showing the claims onto the debit side, and from this debit you are giving a deduction of this reinsurance claims. So if you are deducting it from the reinsurance claims, certainly this amount is going to be taken into the opposite side of the balance sheet. So what is the opposite side of the debit into the balance sheet here? That is an asset. That means this part of the reinsurance claims which is being ceded will be shown under other assets in the balance sheet as due from other insurers, or else we can also call it as amount due from other insurers. So this part of 140 will be taken under other assets again in the balance sheet. I hope it's very clear to everyone. Do you have any doubt with regard to this? Yes?
Yes, yes.
Any doubts?
No, ma'am.
Okay, good. Then continued with the further bonus reduction of the premium. So I think so far you have been just seen that the bonus in reduction of the premium is to be given always as a balance, okay, as a part of a trial balances. So whenever the bonus in reduction of the premium is being given, we usually show it under the expenses, that is under schedule number 4. Okay, schedule number 4. So therefore what happens now further, in case if they give this bonus in reduction of the premium as an adjustment, I'm talking about the adjustment now. If they give it as an adjustment, what is that we are doing? We are going to, okay, we are going to add this further bonus, okay, to the bonus reduction of the premium itself as well as to the premium amount itself. Okay, that means on either side of the revenue account. I repeat once again, on either side of the revenue account. So either side of the revenue account, in the sense what, on the debit side we have the bonus in reduction of the premium, and on the credit side we have premiums. On the credit side we have the premiums. So when you are adding it to the premium, so what is the premiums amount here? That is 15,500. So to this 15,500 you are going to add this 90, as well to the bonus introduction of the premium, that is 50, you are going to add again 90. That means on either side, so this is going to increase the income as well as the expenses of the company. I hope you all got it now. So further bonus reduction of the premium, in the sense what, the amount of the bonus which is to be payable by the company to the policy holders, okay, to that extent it is adjusting against the amount of the premium to be payable by the policy holder. So it is nothing but it is like a set off which is to be made from the premium amount. Okay, so therefore now you cannot forego the income. I mean to say that we cannot stop showing the income, complete income onto the creditor. So therefore this 90 is also a part of an income because it is a part of the premiums itself, and this 90 is also a part of the bonus, and it is also an expense on the other hand. So therefore please remember that whenever the further bonus reduction of the premium is being given, we are going to add it on either side of the revenue account. That means you are adding it to the income and also you are adding it to the expense. So when you are adding it to the income, that means to the premiums itself you are adding, and when you are adding it to the expense, that means you are adding it to the bonus in reduction of the premium itself. Okay, then next here we have the management expenses which is being due. So if the management expenses are due, that means again it is outstanding in nature. So therefore to the given amount of the management expenses, okay, add it. That is the expenses over here is 800. So to this 800 add 40, and because the expenses are outstanding further, so show it as a liability in the balance sheet, that is under current liabilities. Is it clear to everyone? Did you all followed?
Yes, ma'am.
Okay, so shall I explain the next problem, then 11th one, so that at least after your exam, that is tomorrow or maybe after a couple of days, once you finish your CIA 1, you can practice by yourself. Shall we have an explanation towards the next one? I think it's not required also, but still anyways let me do it. So let's have a look into the 11th problem. I will do the 10th one by myself. Okay, so let's have a look into the 11th one. That is, the following trial balance was extracted, okay, from the books of Aviva Life Insurance Company Limited as on 31st of March 2016. So this is also a trial balance, so you can find the debit as well as the credit balances. Now anyway, when you are doing the problem where both the statements are to be prepared compulsory, if the balances are not given directly, okay, then you need to calculate it or I mean by taking into account the given adjustments. So therefore compulsory the working notes is required for each and every schedule. So let's have a look into this now. So the first one here is the claims by death, followed by the claims by maturity. So the claims are always to be classified. Sometimes they just name it as only claims. Sometimes they give it as by death as well as by maturity. So whatever the claims which are being given, okay, these claims are to be taken under schedule number 4, that is benefits. Okay, then followed by we have the commission. So commission here is to be taken under schedule number 2. Then followed by we have expenses of the management. So expenses of the management again to be taken under. So you can see all are the common terms, or the common items which you come across in each and every problem. There cannot be any change in the terms which we are going to come across. Okay, so the expenses of the management is an operating expense, so show it under schedule number 3. Then income tax on profits is also to be taken under 3 itself, that is under operating expenses. Then we have the surrenders to be shown under benefits, that is schedule number 4. Then we also have the annuities paid, which is to be taken again under schedule number 4. Then followed by we have bonus in cash as well as the bonus and reduction of the premium. So these two are also to be taken under 4 itself, that is on the expenses side, which is under schedule number 4. Then we have the debentures. Now one thing here, usually what the students will make a mistake is, as we all know, we have already learned the accounting relating to the company final accounts, or the company accounts, and you already I mean set your minds in such a way that debentures means always a liability for a company. Okay, debentures means it is always a liability. So no matter from where you are picking up the item is very important. Now we are picking up the item from the trial balance, and this part of the debentures is very much is on to the debit side of the trial balance. So debit means what? Either it can be an expense or either it can be a asset. So it can never be a liability. So therefore, don't be in a hurry. Okay, whenever you look into the debentures, first to see which balance does the debenture is showing. If it is a debit balance, that means this debentures is an asset to the company. That means the company has invested in the debentures. If it is on to the credit side, then you can think that this is a liability, and that becomes a source of funds to the company. Okay, so therefore this part of the debentures is to be taken to the assets side and to be shown under investments, that is under schedule number 8. Okay, then when it comes to the preliminary expenses, so preliminary expenses is a part of the fictitious assets. So therefore we have a separate group for the fictitious assets in the balance sheet, that is miscellaneous expenditure, isn't it? So that is under schedule number 15. But what I told you, while practicing or while doing the problem, we don't take this on to the assets side, but we show it very much onto the liabilities. So here this part of the preliminary expenses, you are going to minus it from the reserves and surplus, that is the life assurance fund total whatever we have. So from that total we need to minus it. Okay, then next we have the government securities. Government securities to be shown again under the investments. Then we have the loans on government securities as well as the loan on the company policies. So both the loans are to be taken under schedule number 9 on the assets side. Then we have the buildings, which is at cost, that is 6,75,000. So buildings will be a part of the fixed assets to the company, that is schedule number 10. And out of the value of this particular buildings, he says that 37,500 had been added during the year. So definitely there could be some reason, okay, for specifying such information here. So let's see that I mean what else is required to be done against the buildings. But as of now, the value of the buildings here is 6,75,000 to be taken under fixed assets. Then coming to the credit side of the trial balance, we have the life assurance fund. So the life assurance fund here will be taken to the sources of the funds and to be shown under reserves and surplus, that is schedule number 6. Premium received to be taken under schedule number 1 in the revenue account. Consideration for annuities granted also under 1 itself, that is on the income side. Then we have interest and dividends also under schedule number 1. Now here we have an outstanding annuity. Now annuities usually here is an expense, as you can see, which is to be shown under schedule number 4. But I think there is still an amount which is being due towards the payment of these annuities. And whenever you come across any such outstanding balances, either towards the incomes or either towards the expenses, they appear directly only in the balance sheet, because there will not be any double effect of this particular item. So therefore this part of the annuities which is outstanding will be taken under current liabilities in the balance sheet. So current liabilities comes under schedule number 13. Okay. Then we have a capital which has been issued as well as paid up by the shareholders. That is 3,750 shares have been issued by the company, which is at the rate of 100 each, wherein the capital over here is 3,75,000, which is to be shown under the share capital, that is schedule number 5. Then we have, even on the credit side, the buildings which has been the provision which has been made towards the depreciation on buildings. So usually what happens, this part of the depreciation can be deducted directly from the asset on the asset side, or otherwise on the other hand, this amount of the depreciation can also be maintained in the form of a provision. So here the buildings depreciation so far, whatever has been provided in the previous years, has come up to 75,000 rupees. Okay, so this is an information. So you can decide now whether when you are preparing the balance sheet, you want to minus this amount from the existing value of the buildings, that is 6,75,000 minus 75,000, or otherwise you would like to continue or to maintain this depreciation as a provision in the books. That means if you are trying to show this as a provision, then this has to be shown under the current liabilities. Current liabilities, that is provisions. We have a separate group for this called as provisions under schedule number 14 after the current liabilities. Okay, but I will tell you what is to be done for this after I discuss the adjustments. So what are the adjustments here? The first one is the premiums outstanding. So I will just tell you in one single statement now. Outstanding premiums, add to the premiums in the revenue account and show it as an asset in the balance sheet under the current assets. So under the current assets also you are going to show it under schedule number 12. Then followed by we have the commission which has been outstanding. So add to the commission under schedule number 2. Then again show it as a current liability under schedule number 13 in the balance sheet. Okay. Then followed by we have the further bonus which has been utilized in reduction of the premium. So I have given you a detailed explanation with regard to this in the previous question itself. So therefore what you're going to do, this adjustment is going to have its impact only in the revenue account. So we are going to add this further bonus, okay, to the premiums, okay, under schedule number 1, as well as to the bonus reduction of the premiums under schedule number 4. So one side on the income, the other side on the expenses. The next here we have the expenses of the management which have been outstanding. So you are going to add this to the expenses which have been given. Okay, so show it to under schedule number 3 and also show it as a current liability under 13. Then there is also prepaid expenses to the extent of 2,250. So any amount of the expenses which are already paid in advance, what we do, we minus it. So here the expenses of the management given is 15,000. So to this 15,000, first you are going to add 9,000 as outstanding expenses. So therefore the amount will be 24,000. Then followed by you are going to minus to the extent of the prepaid, that is 2,250. So therefore here the prepaid expenses will be shown on the assets side, that is under schedule number 12, that is advances and other assets, and outstanding expenses will be taken under current liabilities, that is under schedule number 13. Okay, then we have claims by death covered under reinsurance. So I just told you like what is to be done towards the reinsurance claims. So minus it from the claims, then show it as an asset. Minus it from the claims, 15,000 rupees. Then take this amount of 15,000 rupees as amount due from other insurers under schedule number 12. And also there is further claims which have been intimated. So whenever the claims have been intimated here, that means outstanding claims. So add it to the claims and again take it as a liability. That is, the current liability under schedule number 13. Then we have, the depreciation on the buildings, that is 22,500. So therefore, now what you're going to do is, in the working notes, that is under schedule number 10 towards the fixed assets, take first the value of 6,75,000 from this amount minus the depreciation which is already been provided, okay, up to the date, that is 75,000, and from the balance you can also minus 22,500, okay. And this part of 22,500, because it's a depreciation on the buildings, is first going to appear under operating expenses as the first effect, and the second effect here is you're going to minus this from the balance of the asset, that is 6 lakhs of rupees. So minus from the asset in the balance sheet and show it under operating expenses. Then finally we have the premiums which are being payable under the reinsurance. So like how I have explained you about the claims paid under the reinsurance, similarly here we have the premiums which are being payable under the reinsurance. That means premiums, reinsurance ceded. So now again you are going to give the same effect, that is minus it from the premiums in the working notes, that is 6,000 rupees, and this amount is going to appear onto the opposite side, because now the premiums is always to be taken onto the credit side in the revenue account. So opposite side of that in the balance sheet will be what? The liabilities. So therefore this amount is again to be taken on the liability side as due to other insurers under the current liabilities, or otherwise it can also be taken as amount due to. So claims reinsurance is always due from, and premiums reinsurance is always due to. Okay, so once you have done with all these adjustments, okay, finally complete the revenue account, and whatever the surplus or the deficit you are going to get under the revenue account, carry it forward to the balance sheet. If it is the surplus, because I can see from the hint here itself, the surplus will be 91,500. So this surplus you're going to add it to the existing life assurance fund and finally balance the balance sheet. Okay, so this is about the these two questions, that is question number 9 as well as the question number 11. So I hope you will be able to complete these two problems by yourself, and in case if you really find it difficult to do it, okay, I will do it by myself in the next classes. Okay, but still I expect you all to complete, because hereafter we have only 4 or 5 questions which are still left over, and maybe by weekend we will be able to complete this topic. Right? So if there are no further doubts, I'll just end the class here. I'm just stopping the recording.